Yes, hello, welcome everybody to my YouTube channel. Welcome to the Stephen Williams Show. Once again, I want you to listen to this brief video of this gentleman who is saying that it's a very risky time now to be in the stock market, and the key word here is to be cautious. Alright, just listen to this video. It's a short excerpt that I got from Bloomberg.
Best prospects for a bounce back in 2019.
I think Lyle nailed it when he said you've got to be so. He was talking about the energy out west, but you have to be so selective right now. We can look at certain individual asset classes like a U.S. multifamily or like private equity that are in the right asset class. But really, right now, you need to be safety-oriented and accept the fact that we've really only seen the tip of the iceberg. If you look at the amount of decline in the Fed balance sheet, it's 9%. It's gone from $4.5 trillion to $4.1 trillion. It's almost 10%. You know, it used to be under $1 trillion. So when you think about the corrective mechanism that has to be undone right now, we're just getting started, and so people need to adapt to the fact that you're not always going to have these phenomenal stock returns, and we have to go through a period of correction before you resume again.
Quick thoughts on bond markets in 2019.
We have favored short. We've got a little bit of medium duration. We haven't gone long because there's just too much risk if rates have to keep going higher. We haven't plunged into gold either. There's been a lot of talk about that, but that's real rates you've got to focus on there, and they haven't got their feet under them yet, so you can't really run into gold. So we're taking the interest rate risk as much off the table as we can, not looking at corporate just going govy in short duration.
Cameron Hurst, thanks as always for joining us today on The Street.
Good to be here.
Here's how I think most people get wiped out, all of their investments wiped out in the stock market. Let's say you invest $100,000 in the stock market tomorrow morning, and by the next day when you look, there's only $50,000 because $50,000 was wiped out in one night or one day. Now, most people would grab the other $50,000 and run with it. It's better to have half of bread than to have no bread at all. But the reason why most people see their money declining steadily and still stick around is because it is done very gently over a period of time. That is what I have noticed. If you were to lose the money overnight, you would run with the other half. But because this thing is done so subtle and gentle, most people stay in the market and watch their money burn, because every now and again it goes back up, but if you notice the trend is downward. So most people will hang around rather than taking a part of their money and run, salvage what you can. And I believe that's the best thing to do when you see the downward trend. Grab what you can and run. Just count your losses. At least you can use that half when the market is going up back to kind of try and make back some of your money, than to sit and watch everything burn. I have included in this video a graph of a stock called the blockchain hive or something like that. Now this shows that there was this stock was valued at $3.75, and then not all of a sudden, gradually this stock has gradually gone down to 28 cents to date. I cannot believe it. So if you were to say invest $15,000 when it was $3.75, and you sat there and watched this thing gradually go down and down and down and down until it reached 28 cents with all the hope that it will come back, because that's what keep a lot of people in the market when they see the stock going out there. They're keeping hope alive. Oh, it will go back up. And this thing moved from 3.75 to 28 cents. So that $15,000 would turn about $1,100. So most of your money, almost 90% or more of your money, is wiped out because people see the downward trend and still hang around. I believe that the best way to invest in the stock market, and please do not consider this financial advice. I am a former financial advisor, licensed and everything, but I do not now have that capacity. So if you want financial advice, please consult with a professional who will give you financial advice. This is just for educational purpose only, and this is my opinion. Okay, everybody? So I think I have made myself clear. Anything on my channel is not financial advice, it's just my opinion. Okay, thank you very much. Right, so the bottom line is, as I conclude this part, is that you have to be very careful and watch the market. It's best to be out of the market and salvage what you can when it's the bear has arrived, than to allow the rest of your money to dissipate and deteriorate. Yeah. All right. Thank you very much. Hope that you will learn something from this, because I seek to educate and entertain my fans. Thank you. Bye-bye. Thanks for watching this video. If you haven't done so already, please don't forget to click the thumbs up button, share the video, and of course, leave a brief comment, and click the notification button for future videos. Thanks again. Bye-bye.